Good morning. Welcome back to Venture Daily. On today's show, Figma makes its blockbuster New York Stock Exchange debut, tripling in value and signaling a tech IPO revival.
And Meta and Microsoft's recent strong core business performances have allowed them to justify to investors their massive spending on AI for now. I'm Josiah Simons.
I'm Jackson Fordyce. It's Friday, August 1st. Let's get you smarter before your first meeting.
Before we get into it, Jackson,
I
have to address.
Okay.
What are you wearing? You look like you're headed to your Little League baseball game.
It kind of looks like it. Shout out Twins. But this is my my friend Joe's hat. It's his brand called Jack.
Okay.
Also my name.
Yes.
And then I'm wearing this Minnesota shirt.
Because the big news.
Because the big news. Someone's home. Daddy's home. Carlos Correa is back in the H. And, you know, we're not a sports podcast. Maybe we will be one day.
Yes.
And so it's big news for me.
But you're from Houston. You love
from
the
Houston.
Astros.
I love the Astros. And so,
Yes, so
it makes sense for me.
half of our audience just clicked off. They're
Exactly.
Like, Astros. And no,
Half of
thank
y'all
you.
don't need to be here.
All right. What's the news, Jackson?
Yep. On Figma's first day trading on the New York Stock Exchange, its stock soared over 250%, closing at $115.50 and giving the design software company a market cap near $68 billion, more than triple the $20 billion Adobe offered before regulators killed that deal in 2023.
That's right. Silicon Valley is celebrating. The IPO raised $1.2 billion, mostly benefiting early investors like Sequoia Capital, Greylock, Index Ventures, and Kleiner Perkins, whose combined stakes are now worth about $24 billion.
Wow.
Huge win for Silicon Valley VCs after a prolonged IPO drought. That began back in 2022 and was worsened by inflation and rising rates.
Figma's pricing jump follows other recent tech IPOs like Circle and CoreWeave, fueling optimism that the exit window is finally reopening.
CEO Dylan Field, who dropped out of college to launch Figma in 2012, now holds a stake worth over $6 billion and emphasized the company's mission over stock price hype.
Figma boasts over 13 million monthly users and major customers like Google and Netflix, with revenue hitting nearly $250 million last quarter, up 40% year over year.
While some investors like Benchmark's Bill Gurley criticize the massive first-day surge as banker favoritism, most VCs see it as a much-needed return to form. New York Stock Exchange President Lynn Martin called the IPO a floodgate opener, signaling more high-profile listings are likely on the way.
Absolutely. And so for more on this story, I called one of our best friends to the show. Put your hands together for Ben Narasin.
Ben Narasin. I run Tenacity Venture Capital, where I'm the founder and general partner. Before that, I was a VC for about 7 years, mainly at NEA. And before that, I was a seed investor since the beginning of seed. And lastly, before that, I was an entrepreneur for 25 years, took one of my companies public, and just generally learned what it's like to be in the hardest job in the world if you're not a first responder.
Hardest job in the world.
If you're not a first responder.
Other than, of course, being a mother.
A single mother, actually.
A single mother.
That's the hardest job in the world.
Yes.
He looks
Coal
good.
miners.
Coal miners, single
He
mothers.
does. He got a haircut.
Yeah.
Ben's looking good. And he's about to bring
back.
Slick back. I think he's about to bring some truth to the
about
podcast.
To bring it.
Just, I mean, we've watched the answers, but you haven't. So
I
get ready.
was giggling listening to Ben give his answers. And you are in for a treat. My first question for Ben. Figma's IPO success has Wall Street calling it a sign that the tech IPO window is finally reopening. Do you buy that? And who do you think is next in line?
You know, I can only channel George Costanza. We're back, baby. I mean, we're back like Gatsby. This is going to be great. I've been, you know, last year when people did their end of the year predictions and called all the VCs, I said 2025 is going to be a phenomenal year for IPOs. And I've been waiting for that to happen. This reminds me, so when I was an early investor, my first institutional investment was a company called Lending Club. When it went public, it was the largest tech IPO of the decade because it took a decade before tech IPOs opened up again. And that allowed people to understand how great tech could be and allowed the market to open up. So I do believe it. You know, we're hearing people say it's a watershed event, it's a benchmark event, it's a generational company. You know, investors range from the Robin Hood players to big old institutions. And one of the things I've noticed is human nature. It's actually the first time I heard this quote, it was talking about VCs, but that people are a lot like penguins when it comes to investing. They waddle over the edge of the ice floe, they look in the water. They know there's fish in there and they want to eat them. but they're also walruses and sea lions and things that will eat them. So they don't want to go in the water. But then one day, a penguin slips, falls in the water, comes back with a fish, and everybody slides into the water. Okay, this is that penguin sliding into the water. Everybody's jumping into the pond. We're going to see a lot of things. What's next? I mean, people have talked about Canva. People have talked about Databricks. The big question is not which of these are viable companies. There's quite a few viable companies. The question is, are the founders motivated to go public, which is a whole different question. In the old days, the answer was obviously yes. Now it's not so obvious.
Did Ben Narasin just do a Happy Feet shout out on the,
Shout
on the
Happy
show?
Feet.
Isn't that a part of Happy Feet? Like they're all afraid to go in the water, and then one of them falls in or something, and then they're like
we should put that clip in there. Also, I want a clip later of Ben saying, "We're back, baby." Anything good that happens on the show, I want you to hit that "We're back, baby" button. My next question for Ben. Most of the IPO proceeds went to early investors like Sequoia and Greylock. Do you think late-stage VCs are going to push harder for liquidity events now that the public markets are finally showing signs of life?
Oh, yeah. I mean, everybody's crying poor when it comes to, oh, woe is me, I haven't had any liquidity. And I get it. It's cyclical. That's life. Okay, the fact that an institutional investor that has done this for decades doesn't understand that and doesn't have the patience to wait sort of blows me away. But people get hungry and then they get panicky and then they're waiting and it'll be different this time, it'll never come back. It always comes back, and it's come back today. So this is totally, it's not bubble stuff, but it's like the stocks of the bubble. You know, we go out at X and we trade up to 4X. That's pretty amazing. It's also a great example of a company that, because it got busted out of its merger by a flawed administrative process by our prior government that would, I mean, I don't know. How many times do you get overruled by the courts before you realize you're overreaching? If you're the partner, if you're the male or female, it doesn't matter. If you've been dating for the last 12 years and you've been dumped 6 times, and every time the person across the table says, hey, it's not you, it's me, it's you. Okay, when our government cannot get any of its restrictive efforts to hold up as it was in the last administration, it's like, really? When are you going to figure it out? So in a way, they did these people a favor. They did Figma a favor. They probably did Plaid a favor. They busted out an $18 billion acquisition. Now you got to, close in on $60 billion public company. So it's going to be a big time for people to push. Late stage investors often have more ability to push. Early stage investors have some, and usually that's through the influence they have, the trust and respect they have with the founders. Late stage investors have more contractual rights in some ways. There have been examples where late stage investors have forced companies to go public, sometimes to the benefit and sometimes to the detriment. But look, when I go out to talk to LPs, oh, woe is me, I don't have any liquidity is what I hear all the time. Wait till we have some liquidity, then we can talk. Like, guess what? Now you've got liquidity. All right, so time to talk.
Time for LPs to talk now.
Yeah, that sounds
You
like
hear his cat in the background a little bit.
I don't know what that was. It was his cat.
Because you see the tail in the first clip, and the second clip you can hear the purring of the cat.
Wow, it's like a Where's Waldo? Find all the
Where's
little
Ben's cat?
hidden secrets.
For my final question for Ben, co-founder and CEO Dylan Field said, share price is a moment in time, but now he's running a $68 billion company. How should founders mentally shift when they go from private to public overnight at this scale?
Yeah, it is just a number, and it is just a temporary moment in time. When I was running my public company, I remember I walked by and there was this engineer hitting refresh on the stock price. And I was like, what the hell are you doing? First of all, our company's not getting more valuable by you sitting there and monitoring the stock price moment by moment. Secondly, the lockup is 6 months long, okay? Even if you want to sell, wait 6 months before you bother to look, okay? If it's not saleable assets, it ain't money. And by the way, like when I took my company public, never sold a share of stock, ever. So, you got to just focus on the business. You got to do the best you can. The hardest part is sort of managing your new millionaire, decamillionaire, 100 centimillionaire employees who might feel differently about the world. And not everybody is necessarily thinking about these things in an optimal way. I'll give you a different example. Like maybe people had early options and they want to start the capital gains clock. Well, that can create a lot of issues if you decide you're going to borrow money to exercise your options. You can get better capital gains treatment if things go differently later. Risk is always on in venture-backed businesses, including after the IPO. So stick to your knitting, focus on your business, keep your people focused on it, build a bigger and better company. Imagine NVIDIA. When it went public, did you have sold those shares? You want to sell them on the 6-month anniversary? It's a $4 trillion company right now. It's the most valuable company in the world. How would you feel if you sold on the lockup? Like, if you believe in the business, be a long-term investor. And that applies to the employees and the team at the executive level. They're still involved with that business.
Wow. Cool. But he'd been as like a motivational speaker for new founders that become like public companies.
Right. I mean, there's probably 1,000 horror stories to the one NVIDIA story,
sure.
though.
Exactly.
Like, I wish I would have sold.
Oh man, if I would have sold, I would have just, I could have retired.
Right. So there's that. And then he did mention that, the engineer working at his
refreshing the stock price.
Do you think Ben never did that once?
He's like, how much in my stock today? It's mine too. It's my company.
It's like,
that's what Dylan Fields doing.
Okay, Jackson, what is the share price right now? It is 8:39 a.m. here in Austin. Yep. So that means the market opened, 10 minutes ago?
Yep, 9 minutes ago. It is $126, kind of going between 125 and 126. During pre-market, it was like 120. It was in the 140s, one high 130s, 140s.
Yes, and so, as of last night, this morning. But still pretty incredible. It opened at 32 on opening day yesterday.
Was it 32, 33?
Yeah, something like that. And it's now at 126, you said?
Yes.
Yeah, pretty cool. All right, so huge day for Figma and huge day for Silicon Valley. This might be the floodgates opening.
We hope so. Thank you to Ben Narasin for being on the show today.
Jackson, what we got next?
Yes, next story. Meta and Microsoft are pouring billions into AI, and so far, strong performance in their core businesses is keeping investors on board.
That's right. Meta beat Wall Street expectations with 22% revenue growth, while Microsoft revealed its Azure cloud business is now bringing in over $75 billion annually. Their massive capital spending, over 30% of revenue, is following a broader trend sparked by the AI arms race, led by NVIDIA's explosive growth.
Still, questions loom about whether Meta, a social platform, can get the same AI payoff as Microsoft, which sells enterprise software.
With projected expenses nearing $150 billion by 2026, Zuckerberg is betting big, but he can't afford to blow it.
Looks good there. And for more on this story, I called Jaya Gupta.
So my name's Jaya, partner at Foundation. Thanks for having me on. I guess a little context on Foundation. We're a $600 million fund. We write check sizes 1 to 15 million. We lead seed stage investments, and we like to partner with founders at the earliest stages.
Yeah, my first question for Jaya. Meta and Microsoft are each spending tens of billions of dollars on AI and infrastructure, but their core businesses are still carrying the load. How long do you think Wall Street will tolerate these AI moonshots budgets before demanding results?
Yeah, that's a great question. I think what was interesting was both companies have heavily invested in terms of CapEx in all their AI infrastructure. And, as you said, what was impressive was that their top line is actually still continuing to grow. And I do think that that is actually as a result of AI. And so I think, what was interesting in Meta's case was their AI ad targeting actually drove, I think, 5% higher conversions on Instagram and 3% on Facebook. People were always when is AI actually going to pay off? And now you're actually seeing AI generating a meaningful percent of their ad revenue versus just being kind of a promise. And so I think Wall Street's actually kind of okay with the CapEx investment.
Yeah, makes sense. So let's talk about what could prove to be, Jackson, the story of the summer, the tech story of the summer.
Yeah.
Mark Zuckerberg's super team, all right, an AI super team that he's been building. He committed nearly $15 billion first to deal with for a deal with Scale AI, securing a massive data labeling pipeline. Alexander Wang, which is on this picture here,
right,
of course, the CEO of Scale AI.
Yes.
And strategic partnership. So as part of the deal, Alexander Wang, Scale CEO and major AI power player, was tapped to lead Meta's new superintelligence lab, MSL. Meta combined its top research and product team into MSL,
That's a funny
centralizing. Picture. Yeah, pretty interesting. It says, Mark Zuckerberg is coming for Sam Altman. OpenAI just lost 4 key researchers to Meta. So
wow.
They're trying to build towards AGI, artificial general intelligence.
Yes.
The company launched an aggressive talent raid, reportedly offering up to $100 million in compensation to poach top researchers from OpenAI, DeepMind, and Apple. So here's this tweet. On the left is Ronaldo. Real Madrid spent $80 million to sign him from Manchester United.
Right.
I think that was back in 2013 or something.
Yeah.
On the right is, I'm going to mess this name up. What do you think, Jackson?
Yahoo Yu.
Could be. Meta paid $100 million to sign him from OpenAI. He's worth more than Ronaldo. I mean, how could he... do you think he could possibly return the value of ticket sales and jersey sales that
100%.
Ronaldo does?
He starts wearing super intelligence merch all day. He's like a walking ad for them. So it's like, I'm making money off the clock as well.
Yeah, that'd be smart. That'd be smart. With Wang, Nat Friedman, and Daniel Gross involved, Meta is repositioning itself from a social media giant to a global compute and superintelligence powerhouse.
That's what I asked Jaya for my next question. With Zuckerberg building his superintelligence team, do you think they can realistically monetize AGI level breakthroughs?
That's a good question. Well, one, you have to give it to Zuck. He's done a phenomenal job recruiting these people. I feel like every single day I hear a new person from like OpenAI or not Anthropic actually, but more OpenAI like leaving to join the team. I think what is going to be the challenging part of this is when you put so many people in one room and have a general like flat hierarchy and are working for someone like Alex Wang. I do wonder what happens when there's so many egos in the room. And so I do think that the organizational structure will matter a lot. And so on paper, for sure, they could all definitely get, I think, to like where OpenAI is today. AGI, who knows? But I think what's going to be a big hindrance is likely all the egos.
You know what I said? Oh, go ahead, sorry.
You're in the room and you're like, oh, I'm getting paid $10 million to be here by Meta. And everyone else in the room is like, oh yeah, you're the bottom of the totem pole.
Bro, I got 300 million.
Yeah, like,
What are you? It's like a rookie sign-on bonus for me.
It reminds me of like Daniel Negreanu once said, if you're at a poker table, and you're the 6th best player in the entire world playing poker, but you're at a table with the 5 other best players, well, then you're the fish, you know, you're the one getting taken advantage of.
Literally.
So that's the $10 million salaried employee sitting in this room of
The
the
nobody.
super intelligence team. Yeah, you're nobody here, buddy.
My last question for Jaya. Most of the AI revenue upside so far has gone to NVIDIA. Do you think Meta and Microsoft's massive CapEx bets will eventually shift value downstream, or will NVIDIA keep eating everyone's lunch?
For sure. I think, I didn't check NVIDIA's stock price yesterday, but my guess is that it likely went up. And actually, you never know with the markets, but I do think that they will continue to eat everyone's lunch. And I think there'll probably be like a ripple effect in the tech ecosystem with the massive earnings beat yesterday. And a lot of people have always questioned, like, are we spending too much on infra? Are we spending too much on CapEx? But I do think right now the FOMO is so high that people are going to spend on NVIDIA. And so, AMD, they're going to make a lot of money. It's definitely unclear for how long it'll last, but in the short term and midterm, I think they're going to do very well.
Yeah. Thank you to Jaya Gupta for being on the show today.
All right, that's it for Venture Daily today. Thank you so much for joining us. If you like the show, please hit us with the like button. If you didn't like the show, hit us with a comment.
Or
let us
dislike
know.
button.
Don't dislike. Don't do that. And please subscribe to the channel. We've got the best tech news coming at you every day, Monday through Friday, every week for the rest of time.
Until the earth shatters and crumbles into existence. But shout out Content Stack for letting us
existence.
out of existence. Shout out Content Stack for letting us film here every single day in Austin, Texas. If you like today's show, whether on YouTube, Spotify, Apple Podcast, or X, leave us a like, a comment, or review. Throw us a 5-star rating if you think we earned it. And as always, we'll see you Monday morning here at Venture Daily.